Hey everyone, it's Jeremy here. And in this video, we're going to talk about finding the market bottom. How is it that you can know when the trade is done falling? Maybe the overall index that you're looking, or an individual trade, or crypto, or whatever. How can you know that it's at the bottom and it's time to start buying, time to start investing again? That's what we're going to talk about in this video. Let's go. Hello everybody, it's Jeremy Whaley here from Trade Maestro. You can find us over at trademaestro.com, where we can help you learn everything you need to know about trading the markets, whatever it is you're trading, stocks, futures, options, crypto, whatever it is you're looking at, we can help you out over there. In this video, we're going to talk about finding the market bottom. Right now, as I'm recording this video, we've been in a pretty big bear trend. It's been going on for about 7 months in the equities market. Crypto market's been in a big bear trend. So no matter what you're trading right now, this is going to be useful for you. And even if you're watching this, many months or years in the future, this is still going to be kind of evergreen. It'll be very relevant because we're going to talk about how is it you can know that the trade that you're looking at, whatever it is, if it's an individual stock or the overall market, how do you know that you've hit the bottom and now it's time to start buying again? So to understand this, we've kind of got, let's just come over here and take a look at the overall market real fast first. This is the Dow Jones Industrial Average that we're looking at. And you can see the peak happened up here in January of 2022. That's when I'm recording this video, is actually in August of 2022. But peak happened in January. And since that time, the max drawdown that we've had on the Dow is about 20%, just slightly under that. And we've bounced just a little bit here. And now what we're seeing over the last couple of weeks, especially this week, what we're seeing in the headlines is we're seeing a whole bunch of talking heads saying that the bulls are back and it's time to start buying. So how do you know? How do you know if the talking heads on TV are right, or if maybe they're just kind of trying to suck you into an early trade? So to understand that, let's kind of go through the list here. There's a few things that we look at whenever we're looking at market bottoms. The first thing we look at, try to scoot this over. I don't have slides for this, so I'm just going to write them up here. So stick with my yellow pen here. I think it pops a little bit better. The first thing we're going to look at, if I can get my pen to work, is support. Okay. So question number one is, are we hitting support? Okay. And you can just make your own notes because I'll have to erase these, but that's the first key. So if you're not familiar with this idea of support, what is support? Support is a term that we give to the buying zone where people start buying an individual trade. So we call it your support zone or your support area. And this is basically where the buyers show up. It's going to be on the bottom. Resistance is the opposite of that. It's going to be at the top of the trade. And so support is something we're looking for. Is the market providing support wherever we are in the market at that time? So let's take a look over here at the Dow Jones and see if this area right here is a known support. Just so you understand, that price is about 30,000, give or take just a little bit. And you can look over here to the left and you can actually see that, yeah, there actually is some support here about 30,000. If I took my horizontal line and I held it across there, you'd see that, yep, there's a lot that lines up right in there. So it's a pretty decent support level. Now, if you've been following my market forecast right now, you know that that's not the bottom I've been anticipating, but it is pretty decent. And really quick, I'm just going to turn on my lines. It's going to be overwhelming, but you're going to see my lines coming in here. And I'm going to kind of circle these major areas. And normally when we draw support, we leave them on the chart. I took them off so it wouldn't be as overwhelming. But you can see kind of those yellow circles. These were all price ranges that we already had targeted. So check, yes, we have our support that is being hit, definitely bouncing on support, and that is a reasonable target. It's a reasonable place for us to be finding some support. So that part of the equation, I'll give it a check. Yes, we're good. We got some support. Once we get to support, what are we looking for? Because what you have to understand is this entire journey down, especially if you're in a long bear trend, the entire move down is going to hit a lot of different support levels because there's support all over the place. And so every time you notch down, now the question is, are we building support on that? So if we come back over here and we look at the chart again, what you're going to notice is we've only really pushed into this. We had kind of at the 31,000 range. We pushed into it a couple times. We got one here, and then we've kind of pounded into it right here, but just a couple of times. The 30,000, we got two very brief touches on it. Now, some people would call that a double bottom. It's really not a big enough double bottom to qualify as that pattern. We'll talk about patterns here in a minute, but I don't know that I would qualify this as quote unquote establishing support. What I would rather see, and let me change our pen color for this. What I'd rather see is I'd rather see approximately from where we are come back down and really build that support at 30,000, build a base, and then rally from there. That would be a much better pattern, and that would be more confirming. So we'll talk about that in just a minute. But just as far as support itself is concerned, check, we've got it. Now, the next question is, once you've hit support, what's the next signal that I'm looking for? And the next signal I'm looking for comes in line with my these lines that you see on here. I'll just write it up here as my point number 2, and that is my moving averages. Okay. Now, the moving average is a tool that we use. It's an indicator that we put on the chart, and I use it for several different things, but I'll kind of give you my highlights here. Change our pen color so we have a little bit of room here. So these are kind of subpoints for your moving averages. I don't think that blue is very bright. Can you see that okay? Let me know in the comments if you can see the blue all right. We'll go to the white here. All right, so the first thing I'm looking for is, am I back above the moving average? Okay, so that's the first thing I'm looking for. The next thing I'm looking for is, are my moving averages crossing? And I use a series of 3 moving averages. I use a 10, a 20, and a 50. And I use all 3 of these all the time. Okay, so are my moving averages crossing? Am I above? Is the price action above the average? Are my moving averages crossing? And then my third one is, do I have a good angle to my moving average? Okay, so do I have a good angle to the moving average? Let's get over here and look at the chart. And by the way, if you're trading crypto or something else, these all apply, and I'll look at some crypto after I'm done teaching you this stuff here. Okay, so look at the price action, and the answer is yes. There's the price action, and we're above the averages because the averages are all down here. So yes, we're above the average. Number 2, yes, the averages are crossing, so that's good. Check, check, right? So we got that. And then what about the angle? And that's where we kind of run into a little bit of an issue here. We have a little bit of an angle, but we don't have a big angle. And this is a very awkward, not awkward really, but it's just kind of a strange concept to understand this idea of what I call moving average angles or trend angles. Your moving averages in a sideways move, they'll still cross, and you can be above them and you can be below them, but the averages will kind of move sideways. So let me come over here and see if I can find a good example of this. And one example would be maybe right up in here. This was kind of a sideways move. And if you can see the, right in here, if you can see the moving averages in here, you notice that they're going really pretty flat, especially the red one. That's my 50 period. Look how flat that is. And then you look at the kind of 20 period and the 10 period, and even though they're crossing, and in this case, even though the trade was below the averages, there was no angle to that trend, okay? So you say, how do I define an angle? How could I know? Well, the best way that I have found, and I learned this trading Forex, but the best way I've found is kind of draw a circle around it and tell me what time it is. You know, at the top, it's 12 o'clock. Over here, it's like 3 o'clock. Down here, it's 6 o'clock. So what time is it on the clock, on the circle here? And so let's go to, on this one, it would have been 3 o'clock, and that's not a very good angle. Right over here, just right next to it, though, you'll notice if we drew this, and you can see those angles moving in there. Well, that's like 2 o'clock, 1 or 2 o'clock, right? 1 to 2. And that's going to be a really good bullish angle, 1 to 2 o'clock. So if you got your moving averages moving at a good angle, that's going to be a good angle for your trend. So what do we have right here coming to current? Well, if I draw a circle around it, I've got my 10 period is kind of like at the 1 o'clock. My 20 period is like 2 or 2:30 maybe. And my 50 period is pretty much like at the 3 o'clock. I didn't draw those numbers very well, but It's not a very good trend angle. That's kind of what I'm getting at. It's okay. And at the beginning of that moving average cross, you'll kind of have some of that sideways movement, but it's not a great trend angle. And if you've looked at enough moving averages, you'll start to learn this pattern. You start to see it and you'll be like, it's really not that strong. The 10 period might be strong, but the 20 and the 50, not such a strong angle at this point. Now, it could get there, but we're a little bit early. So kind of starting to get a little bit gray on this particular aspect, okay? So what's the third thing that we're looking for? The third thing I'm going to start looking for is going to be my chart patterns. Here, I'll take this full screen for you. Chart patterns. Now, this is actually an entire study in and of itself, chart patterns. But let's take a look and see what kind of chart patterns do we have in here. Before I go too far, let me teach you the kind of patterns that we are looking for. So when I'm looking, I'll just scoot this over so I can kind of draw on the chart here. When I'm looking for reversal patterns, you're assuming that you're coming down in a big trend. Okay, coming down in a big trend. And in here, I'm going to start looking for certain patterns. One of those, kind of the most important one, the primary one, is what we call a double bottom. And it's going to look something like that right there. Looks like a W for winter, right? That's a double bottom. The general time frame on this is going to be typically maybe 4 to 6 weeks between, this is on a daily chart, about 4 to 6 weeks between point 1 and point 2, okay? So that's kind of the primary pattern that we're looking for. And then on this, I'm going to draw this in a different color so you can really see it. This first bounce, that circle, that becomes your breakout point. And when it hits that, pulls back again, and then breaks out, that is kind of your critical breakout to tell you that, hey, we're confirming a double bottom. Now, there's more price action after that we're looking for, but that's the first pattern we're looking for is a double bottom or something similar to it. A equally valuable pattern, actually there's several of them, so let me just kind of go through several of these here. One is going to be a triple bottom. As the name suggests, instead of having 2, it's going to have 3 bottoms. And then the critical breakout point is going to be that the same kind of bounce. We call it a neckline. I was trying to keep it not technical, but that's called a neckline. And that's the breakout point. All right, that's triple bottom. Another variation on that would be what we call an inverted head and shoulders. And it's basically a triple bottom, but with a lower midpoint. So you have your first bottom, your second bottom was lower than the first one, and then your third one kind of matches the first one. 1, 2, 3. So it's a triple bottom, and the middle valley is lower. And again, you have your neckline. That's your breakout point. That's actually where the terminology neckline comes from. Those are your primary bottoming patterns. Another variation would be a channel, which is actually a consolidation pattern, but in this context, it could be a multi-bottom or something similar to that. And it would look something like that right there. But regardless, what you're doing is you're establishing what we call an accumulation period. Okay, so those are the critical patterns that we're looking for. And then the follow-up to that is kind of part B of the pattern. Once you have the pattern, whatever that pattern is, and we'll just stick with like a double bottom for now. Once you have that, and once you break out of the neckline, it doesn't have to do this, but most of the time, once it breaks out, more often than not, it comes back down and tests that neckline from the top, and then it continues, okay? Now, I made a big deal about that because this is my favorite place to enter the trade, right there, okay? If you have that bottoming pattern, whatever it is, it could be double bottom, triple bottom, inverted head and shoulders, multi-bottom, whatever it is. If you have that bottoming pattern, breaks out of that first resistance that we call the neckline, breaks out of that, comes back and tests that from the top, and then starts to bounce, boom. That is the best entrance you'll probably find. It's a great setup, okay? Now, how can we know? Well, now we start to stack the three tools that we've already learned. Support, we're bouncing at support. We got a double bottom at support. Okay. The moving averages, we're above the averages. And now I'm going to change my pen color yet again. We'll do it with a green one here. What you're going to see is those moving averages coming down the bearish trend will kind of do something like this. And then as you're putting the bottom in, they kind of start to move sideways and then they come across. And it's right about there when you start to get the really good angles lining up and all the crosses happening, prices above it, got the crosses happening. It's all starting to stack up. So that's really the signal. That's my favorite part of this. Okay, so with that in mind, let's come back over here to the Dow Jones and see what's actually happening. And I mentioned earlier that we would talk about the possibility that this is a double bottom. One could look at this and say 1, 2, boom, boom. And somebody could maybe call that a neckline. And you'd kind of be sort of right. It's not a very good bottom. It's not a very typical textbook bottom. It's about 4 weeks apart. So I guess from that context, it would work. But there's a couple of problems with this. Number one, it's really more of a consolidation. And I really hate to even call it a consolidation. It's a type of a corrective pattern that really doesn't have a name. That's the truth. So it's kind of hard to name it here. But if you can see in here, I'm drawing it in yellow, you actually had a lot of price action in the middle. You see that? That is not part of a double bottom. That's why I'm saying it's not a double bottom. This is like a little weird consolidation that happened to break to the upside. So it's not a double bottom. It's not a triple bottom. It's definitely not a triple bottom. Triple bottom is going to be much bigger than that. I just don't think it's a pattern that's worth even naming a pattern at this point, personally. Some people might, well, a lot of people would call it a double bottom, but a lot of people call a lot of things double bottoms and are double bottoms. So I don't name that a double bottom. If you want to call it such, then feel free. You can call it that. But I just personally do not think that we have a pattern here. So boom, I don't think we got a pattern. Second, the question would then be, if this was the neckline, and I'm not saying it is, but if this were the neckline, then we would be watching, ideally, doesn't have to, but we'd be ideally watching for a pullback to around here and then a bounce. That has not happened yet. I am watching for that now. That's what I'm watching for, okay? Now, it is true that the moving averages have crossed, and it's true that we're above the averages, and one could even say that at least the 10 period has a decent angle to it. However, that is exactly what happened over here. And it was a fake breakout. It was a head fake. So just because it's crossed, you have to realize the whole reason we spend time working on reversals, because market reversals are the hardest thing to identify. And remember, if you go back to basic Dow theory, a trend is assumed to be in effect until it's given definite signals of a reversal. We don't have definite signals yet. So I'm giving you those patterns that we're looking for definite signals of a reversal. We just don't have them yet. So this reversal is starting to break down a little bit. It's a little bit early. We've looked at support. We're there. We've looked at moving averages. We're there. For the most part, it's getting a little weaker. We're there. Looked at chart patterns. Now we've also talked about the price behavior, what we would expect after it breaks out of a chart pattern. We don't really have a chart pattern, but if we did have it, what would we be expecting for price behavior? And that's not happening. And then the last piece are your indicators. So what would we be looking for in terms of indicators on this thing? Well, if you go straight down here, you're going to see my stochastics oscillator. And my stochastics oscillator is a great tool for market reversals. And there's a couple signals that we're looking for in this. And the first one is what we call a bullish divergence. So what you would see for a bullish divergence, we don't have one, but what you would see is you would see the market making lower lows and the corresponding valleys making higher lows. Well, we don't have that. So you got a big on that one. Now, the bullish divergence doesn't always happen. It does happen often, but it doesn't always happen. So just because it didn't happen doesn't mean that the reversal's not there. But that's the first thing I would be looking for. The second thing, as far as that bullish divergence is related, I would ideally, it doesn't have to, but ideally that bullish divergence, I'm going to draw this like as a hypothetical now. Ideally, that bullish divergence would be doing it kind of in conjunction with a double bottom. Okay, so that would be ideal. 1, 2, something like that. Or maybe part of an inverted head and shoulders. That would also be ideal. We don't have that here either. And then the other kind of the final piece on this, what I would expect to see from my stochastics is if and when this breaks out and it comes back and tests and bounces, I'd like to see my stochastics down here crossing up. Again, we don't have that. Now, it is possible for a new trend to get established and for my stochastics to be overbought and stay overbought for a little while. That is possible. It's just not, in this context, it's not very typical. So let's go back and let's look at some other reversals where this has happened. And I'm going to go to, we'll start with the 2020 bear market. Okay, now this one was very fast. Very, very fast reversal. We didn't really get a bullish divergence down here. I mean, we just got kind of like a double bottom on your oscillator down here. But if you look at the pattern, like this was just such a fast bearish swing. I mean, it only took like a month, right? It was the month of March. And then we rallied out of there. But here is the breakout and then the test. And then the continuation. If you look at that, we were not overbought yet whenever that test and continuation happened. Okay. Then when we did get overbought, notice what happened. We actually kind of stayed flat for a little bit in here while our oscillator had a chance to reset. And here was the actual buy signal that we got, which showed up like a month later. So that's that was a different bottoming pattern because that was what we call a V bottom, which I didn't talk about because they're kind of rare and we just don't get them very often. Let me show you the opposite of the bullish divergence, and that is the bearish divergence, and I'll show you how this works because this is a topping pattern. And what you'll notice up here at the top is there's your double top. You'll notice you had higher highs, and you'll notice that down here we actually started to have lower highs on the oscillator. See that? There's your bearish divergence. And then notice how going into the coronavirus, we actually ended up with a breakaway gap here, which is a pretty big signal. And then it just kind of started surging. And your stochastics were overbought and they were crossing down. In this case, it was a panic, so it sold off very, very fast. Ideally, it gives us a little bit more warning, but we still had plenty of warning on this. Okay, so that was going into the COVID coronavirus. Let's go back to like 2009. This was a big bear market. And I like to talk about this one a lot because it gives us so much to learn from. Here, how about I just do it that way? This one is very textbook. So let's talk about all of this. Okay, this was the 2009 bull market, or excuse me, a bear market that reversed on us here. And so I just kind of mark it out for you. This was a huge bearish trend, and it was a huge bullish reversal pattern. This is an inverted head and shoulders is what that's called. Left shoulder here, there's your head, and here's your right shoulder. Okay, now you don't see the bullish divergence on here between these valleys, but watch what happens. I'm going to actually go to my weekly chart because it was such a big pattern. You can see this better on a weekly chart. So we're on a weekly chart now. Okay, and here you can really see it clearly. There's your lower lows. And here's your higher lows. There's your bullish divergence is what that's called. Here's your inverted head and shoulders. So I drew it on the daily chart first. And then after the breakout, look at what your stochastics were doing. They were supporting the breakout. They were not crossing down. They were supported it. Okay. And we stayed there for quite a while, for about, in this chart, several weeks, because this was a weekly chart. But you can really see how that reversal happened. And then we really didn't even have the full confirmation until we were back, kind of in summer on this chart. Now, it's hard to time a big picture trend like this on a weekly chart. That's why we normally look at daily charts. And I think I have lost. There it is. Too much zooming here. Sorry about that. No, I'm back in 2020. Oops. I wanted to show you the 2008 version of this. My apologies. Okay, here we go. So this is the same inverted head and shoulders shown on a daily chart instead of the weekly chart. And you can see early on in that, actually it was just after the head, we actually got above the moving averages and we stayed there. And then here was kind of the first pullback. And look at how good that looked on your stochastics. Okay. So you can really see the pattern. I hope you can see the pattern as it showed up here. We got through the lower lows, started to get the bullish divergence coming in here. We actually had some early on the daily chart, but the final piece we did not have. There was no bullish divergence on that, so don't confuse that. Got above the moving averages, had the moving average cross, had some pretty decent angles in here, really good angles on the second one, which happened in July of 2009. Okay, so the market actually bottomed in March 2009, but July of 2009 is when you started to get really, really good signals. And that was the completion of the market bottom. And of course, if you followed the market since then, at that time, market, by the time we started getting those signals, market was around, on the Dow was around 9,000, 8,500 to 9,000. Today, we're over 30,000. So if you had used that as your buy signal, you would have had a very, very good decade, basically. Yeah, basically an entire decade that worked extraordinarily well. And those are your typical market bottoms. They really are. We can go market bottom after market bottom and see very, very similar patterns. How about we go over and take a look at one on crypto? I just want you guys to know, a lot of times people who are trading crypto don't think that the stock market stuff is relevant for them. It's very much relevant. Okay, so let's go to this bottom here. This was in Bitcoin back in 2021. And you can kind of see all the same stuff that we were just talking about. You can see, here's your support. Okay, I drew a little crooked, but there's your support. And we put in, it's not like an orthodox pattern of any sort, but it's definitely an accumulation pattern that we put in there. Next, we broke above our moving averages. We had great angles on the averages, so that happened. Like I say, the pattern wasn't like an orthodox pattern, but it was a very good pattern. It's still what we call an accumulation. And notice that our stochastics was supporting this bullish trend. Okay, so it was not overbought crossing down. It was supporting the trend. And yeah, there it was. So then we moved, in this case, on Bitcoin, from about 35,000 on the breakout to 60, almost 70,000. And then we had the top. Now notice the top here, because we've been talking about bottoms, but you have basically the backwards pattern on the top. So here's your what we call bearish divergence. You had higher highs, lower highs on the oscillator. Oscillator breaks down. We're down below the averages. Averages are all crossing down now, and they have a good strong angle to the downside. And in this case, your bearish break was about 58,000. And of course, if you've been trading Bitcoin, you know where it went, 30,000 and below, then ultimately down to 20,000. Question, are we done? Okay, before we do that, before we talk about current on this Bitcoin, let's take a look at this little setup right here. Because a lot of people, when we got down to 30,000, myself included, we started looking at this and saying, you know, is this the bottom? And we did have some pattern in here, but it was a very clunky pattern. It wasn't a good, clean double bottom, triple bottom, none of that. And then we did have a good breakout up here, but very quickly it just reversed, dropped back below the averages. And if you look at your stochastics, during that breakout, we were already overbought crossing down. So there's kind of some conflict there. It wasn't a really clean break. What about where we are right now? Well, where we are right now, we do not have a clean pattern. We do not have any kind of bullish divergence. And actually your stochastics is breaking down once again. So even though I've done a video recently, if you're watching this, who knows when you're watching this in the future, but I recently did a video and did some trade setups on Bitcoin. And I do actually think we could be putting a bottom in, but it's not confirmed yet. We got a lot of work to do. If you look at these angles and these moving averages, no. If you draw a circle there, it's 3 o'clock, right? So that clock angle does not work out. We're above a couple of the averages, but you know, a couple of them have crossed. They haven't all crossed. They're actually converging. The 50 and the 20 and the 10 are coming together. Those are sideways patterns. So we could see Bitcoin break out to the upside pretty soon here. And, there's some reason to think that would happen, but we do not have a reversal yet. And it's very early to suggest that we do. So I hope that's helpful for you. I hope you guys got a lot out of this. Let me just kind of recap for you. First thing is looking for some support. Are we at a support level? Do we have, are we back above the moving averages? Do we have the moving average crosses? Do we have good angles to the averages? So those are kind of my first two things I'm looking for. Next, we're looking for a chart pattern. Do we have any kind of a chart pattern? Next, we're looking for price performance, price behavior after the pattern. Do we have any of that confirming? The answer in this case for Bitcoin was no. And then, of course, what are our indicators saying? Are they confirming this? And that's kind of like a multi-step approach to confirming a bullish reversal. So that would be a bear trend that's reversing in a bullish direction. There's a couple other things that we didn't talk about. I'll give you this one too. One more kind of price thing that we can look at is a 3-point reversal where you come up, you make a new higher high, and then you come in and you make a lower high. Said that backwards. Higher low. And then you put in a new higher high. Okay. So that is further down the road. That's the first patterns that I gave you here in terms of the support, in terms of moving averages and all that. That's kind of getting pretty early in the reversal. This 3-point reversal, this is kind of a final confirmation. Once you have the higher high, the higher low, followed by a higher high, you're pretty much confirming the trend at that point. And so that's a really good additional confirmation. Depends on how early you want to get into the trade. A lot of people really want to try to bottom fish this and get in as early as they can. A lot of other traders like to wait until it's really confirmed. And either way really can work for you, especially if you're buying the equity. If you're trading something like options or something that's got time decay to it, then you probably need to wait until that trend is established. And since I'm primarily an options trader for stock, I tend to wait for a little bit more confirmation, but we can still get in pretty early, just looking for as many pieces of confirmation as we can so we can really stack the probabilities that the trade is moving in our direction. Because, if it sits there and just goes sideways for a while, it'll eat up your time decay. All right. I hope this has been helpful for you. If you like this, then check out the rest of the stuff we're doing over at trademaestro.com. If you've not got subscribed to the channel here, get yourself subscribed so you get alerted and, you get all the alerts and stuff that you get whenever we post new videos, because we put a lot of these up. And be sure to check back for market updates and all that stuff. Try to do at least 2 market updates a week. Try to do some stock and some crypto updates. Sometimes we don't get them all out, but most of the time we get something out there. And if you got some other videos regarding some of this stuff that you'd like to have discussed, then let me know. Put it in the comments below, and I'll see if I can put some of that stuff up for you. If you'd like to learn more about how you can be the best trader that you can be, check out my Pick Winning Stocks Challenge, or if you're trading crypto, check out my 7-day crypto challenge, or if you want, just check both of them out. It doesn't hurt you. Put the links below here in the video so you can go check that out and get yourself started and learn my entire trading system and all the tips and tricks that you need to be the most efficient and best trader that you can be. All right, thanks again for watching. Be sure to subscribe, and I'll look forward to seeing you next time. Until then, happy trading to all of you, and we'll talk to you soon.